Did the FTX failure yesterday cause the sell-off in the market? That's coming up on 3 Minutes on Markets and Money. Market sold off fairly sharply yesterday, down over 2% as stocks really broke through the 50-day moving average and the 20-day, holding on to that level kind of really very tenuously right now. It's important for markets to rally today back above that level. Otherwise, we're going to start potentially retesting these lows that really kind of go back to June of this year. So again, we're still in this consolidative range. We really haven't gone anywhere. This midterm rally has been more lackluster than not, kind of very disappointing of what we would have expected. But again, the market does continue kind of in an uptrend momentarily. But again, we're very, very close now to flipping over on this MACD sell signal, again, suggesting that markets are going to try to go lower here short term. But again, a lot of this is going to hinge on the CPI report today. If that number comes out better than expected, could see a recovery rally from here very quickly, which could stave off that sell signal. So again, today's action is going to be very important, but how we close the week is going to be the most important. So where we close this week is going to really dictate kind of where the next move of the market is going to be. But again, very tenuous here. Yesterday, the failure of FTX, which is that Sam Bankman-Fried venture of kind of a crypto exchange, Binance was supposed to bail them out. They backed out of that. There's about an $8 billion hole sitting there with FTX on customer funds. A lot of high-profile investors, Tiger Global, Tom Brady, Sequoia Investments, which wrote their entire investment down to zero yesterday, BlackRock, others, all caught up in that FTX failure yesterday. Very likely some of the selling yesterday was actually some margin calls, assets being sold off in the markets to offset margin calls coming in because of that FTX downfall. Also, too, yesterday, terrible 10-year Treasury auction. Really bad tail on that auction. Again, we talked about the risk of liquidity in the Treasury bond market. The Treasury needs to sell bonds. Banks don't really want to buy them right now because the Fed's not buying them. They don't have a ready buyer to sell those bonds to. So auctions were really weak yesterday, but actually bonds did fairly well. Looked like some assets were moving into bonds as well because of that FTX failure, looking to shore up some safe collateral in portfolios, at least short term. So again, that sell-off yesterday likely largely attributed to what was going on with FTX in the markets. Again, not entirely all of it, but certainly some of it could be attributed to that FTX failure. So we'll see if markets can rebound today. Right now, futures are pointing up slightly this morning, but really all of today's action is going to be focused on what comes in on that CPI report. Currently expected to be 0.5%, but a weaker number certainly could bode well for a market. If that number comes in stronger, could see another sharp sell-off in the markets as well. So again, we'll bring you up to date on our next 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Get by the website, realinvestmentadvice.com.